The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. It's Jobs Friday, and we come into Jobs Friday with 177,000 jobs added for the month of April. We have an unemployment rate at 4.2%. As I kick things off, which is interesting, okay, if you carry the unemployment rate out to 2 decimal points, you do get a slight uptick, 4.15 to 4.19. Nonetheless, 4.2% on the unemployment, 177,000 jobs added. On the wages, slightly less than what the market was looking for. Average hourly earnings up a little bit less. That's a good thing for inflation, right? So what do we have? Jobs beat. We were looking for about 130,000 maybe. We get 177,000. For the month of March, you get a slight revision downward, so pretty much a net number that comes in even. Unemployment rate, 4.2%. As I said, if you break it down to 2 decimal points, 4.15 to 4.19. For those of you out there in the camp that is time to cut, we have weakness, 4.15 to 4.19. But in general, we have a Fed decision coming up this Wednesday, May 7th. And all indications are we kick things off with yields. You talk about lower price, higher yield. The Fed is not cutting, and they're not cutting this coming Wednesday. That's for sure, and we'll see when they do. But you talk about a drop, right? And boy, it started yesterday right at 10 o'clock when I got off the air. I looked at the market like an hour after I got off the air. So what just happened in yields, man? And the dollar was doing it as well, and it's continuing today. We got the 10-year right now at 4.29. Okay, I think when I was doing the show yesterday, folks, it was 4.13, up 15 basis points in like 24 hours. Let me pen it down. What was the low yesterday? Yeah, the low yesterday, all right, just taking a look. Look at this spike in the last 24 hours. What do we get to a low? Yeah, about 4.12, and we're sitting at 4.29 right now. Yield on the 10-year, 4.29. You talk about a move. We jump over to the dollar. Now, this move yesterday, right? That's where the move began, 10 o'clock. And what was interesting is we have yield spiking. You have dollar strength. We're right back to where we were. But this looks to be a meaningful move in the dollar. Continuing to bump up against the 100 area. And it's a decisive area, okay? And not to, one way or the other, but this is consolidating for a break. And that move yesterday, in light of the move we're getting today, what do we get? We're getting a relentless American exceptionalism economy, jobs added, wages helpful on the inflation front, and there's no reason the Fed has to rush. Simple as enough. Simple as can be. You leave rates where they are, and we're going to jump to the 2-year. And how about that? That's a mammoth move in the 2-year, folks. Okay, that is lower price, higher yield coming at you. And when you take a look at the entire yield curve right now, okay, we're talking about the 2-year right now up 8 basis points. Folks, that's mammoth. The 10-year right now up 6 basis points, higher yield across the curve. It is interesting that as you look at the higher yield in the market, the headline at the top is that President Trump calls on the Fed to lower rates once again. That's not what the market's saying right now, folks. Nonetheless, there's your 2-year. Keep your eye on it. Watch that dollar today, man. Seems like we're ripe for a setup to break above 100. I was looking for 90, but whatever's going on. Yesterday's movement, okay? You got to be nimble. You got to be quick. Don't get tied to anything in this market as things are moving quickly. There's a lot of dollar strength there. And in light of what's happening with yields, man, this is a move, okay, as I mentioned. All right, we jump to the indices. Now, you got 2 stories here. You have 3 stories, actually. Here are the stories. Apple and Amazon last night, okay? Think of what the market is digesting right now. Amazon If you were buying at the lows last night, congratulations. We'll see what today holds, but nonetheless on the open, Amazon positive by $3 after driving down to 180 on their numbers. Now the real news driver there, okay, is you have the conference call, okay, but check it out at 8 o'clock at night as well. Okay, 8 o'clock at night, we were trading at 184. What happens at 8 o'clock at night? Let's find this headline. China, oh, no, that's not even it. Forgive me. There we go. China signals readiness to respond to U.S. trade overtures, okay? Beijing again seeks to end the tariffs nonetheless, okay? It was an olive branch. Chinese Commerce Ministry spokesman said China is currently evaluating repeated comments, expressed their willingness to negotiate with China on U.S. tariffs, right? That's U.S. officials talking about that. It was, and you see it in the likes of Amazon catching that bid, but check out the S&Ps on this bid. Okay, there's your acceleration on the China message. You trade up to 5670 from almost 5600, and here's the jobs number this morning. There was Apple and Amazon, and you know, quite the charge higher from Amazon. But you talk about a statement, folks. Yeah. How about projected operating profit? I love Amazon longer term, right? But boy, if you just tell me this number prior to earnings, okay, their projected operating profit 13 to 17.5. How about a range, right? And that entire range is below the estimate. Whew, that's a problem. Sales 159 to 164 billion, basically in line. But look at the profit numbers, okay? Amazon said results may be materially affected by many factors such as tariff and trade policies, recessionary fears. So that comes out, and then you have Apple out there. Sales rising in the low to single digits, but Apple, how about $900 million? Yeah, Apple results showed weaker than expected sales in China, and it expects, we'll call it $1 billion. $1 billion in higher costs from tariffs. But nonetheless, Amazon shakes it off. We're trading at 193. S&Ps are positive by 75. NASDAQ 100 futures right now, we're trading down at 19.7. We're up 400 points from where we were right then. 400 points. You talk about an acceleration. Now, in terms of statistics, probabilities, okay, volume, folks, this is the ninth consecutive day of gains right there. You know when the last time we did that was? 2004. How about 20 plus years ago, market hasn't caught in a bid like this. There's a lot of optimism priced into this market right now, okay? We'll see if we get some volume today. We'll see which way we go. The opening bell is in 16 minutes, and we've seen reversals before. And even if you don't call for a reversal, look at the consolidation area we're coming into, okay? And what I found myself looking at, so I'm watching Apple. I'm watching Apple early this morning prior to the jobs number. And I find myself saying, at 8 o'clock last night, Apple was trading at 205. You're barely higher. You chopped around at 206 all the way until the jobs number. If Apple can't catch a bid on that type of acceleration on China, and yeah, they already have a reprieve for technology in certain aspects, okay? There's so much optimism priced in on the other side of the tariff scenario right now. What news drives it higher? Well, we're seeing news on the jobs front. We're coming back, folks. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Welcome back, folks. We get the S&Ps up by 69 points right now, 56.92. We reach a high of 56.99 just a few minutes ago. And as I mentioned, this market coming in for the 9th consecutive day. Consecutive probabilities, folks, okay? Even if you have a 50-50 probability of something occurring, even if you have a 75 chance probability of something occurring, consecutive probabilities, it's why the lottery is so hard to hit. It's why exponential growth is sometimes tough to imagine. 9th consecutive time, haven't done it since 2004, and all indications are we're going to do it today. Coming into the open in 10 minutes, we got markets up by 70 on the S&Ps and NASDAQ 100 up by 243. Amazon gets it all back. We're at 192 right now. You have Apple in the negative, though. Apple negative by $7, trading at 206.80 after hitting 203.84. And let's take a look at some of the price and volume in these indices. So yesterday, lighter volume on that bar, pretty muted. Today's going to be an important one, right? You see the uptick we had on Wednesday. That was an important day. We had a volume spike. Things were setting up to the downside going into that. Wednesday, we get a volume spike. You come into Microsoft and Meta after the bell. They deliver. Okay, Meta in the positive today, trading up by $14. How about that one, right? We're up to 586 from 572. We're all the way up to 595 yesterday. And Microsoft, man, yeah, that was just, they did give back some of the gains. Microsoft was up 10% yesterday. I believe you finished the session up around 7.5% to 8%. But boy, they crushed it out of the park. Their forecast crushed it out of the park in the same way. And now that we've had Microsoft, Meta, Apple, Amazon, Microsoft, number one on the totem pole there in terms of how they crushed it in a big way. And there's different dynamics, of course, in play. But Microsoft going to be $4 higher, almost 1% on the open as well. Okay, jumping back to the jobs data and some of the numbers here, as I mentioned, and that's what's so interesting, right? Unemployment stays steady. Actually, it went up by 4/100ths of a percentage, okay? But 4.15 to 4.19. If you're out there looking to make the case, and you shouldn't be looking to make the case, let the data make the case, but there is. You're going to see that unemployment stayed at 4.2, but it was up slightly. It's been stuck there, though, since July of 2024. 10 months we've been at that same unemployment rate, okay? Change in hourly earnings. That's a good trend. That's the one that stuck out at me for sure. You check it out, up only 0.2% versus 0.3%, okay? On a year-over-year basis, wages are up 3.8%, which is actually outpacing inflation, consumer prices, so you have real gains in earnings. Yeah. And labor force participation rate increasing. A lot of people were calling for that to actually decrease. So a good number across the board. All right, yeah, this one out here. Take Two, Interactive, Grand Theft Auto. It just keeps going, man. And guess what? They're giving themselves a year. It was supposed to be out this year, okay? Take Two. You're going to drop by $20 on the open. From $238 to $215, you were down as low as $196. We take a longer-term look at this equity. Yeah, you were at 200, and you're going to open at 215, and you were as high as 215 in 2021. And look at the... Yeah, it makes sense you're coming back to test 200 on this equity, man. You know, you had some nice volume last month for sure, to the upside, but they wait until May to kick it off. And when they give themselves a year, folks, this isn't saying that we're going from July to August, okay? That was supposed to launch in the fall. They're now talking about May of 2026. A year out, anything can happen. And this has been on forever. Yeah, they had a teaser trailer for the game 2 years ago. They got some problems over there. I'd be careful of that equity when you're talking about they have another full year, and who knows really what's going on when they say, you know, give us a year and then we'll be ready. They got a lot of work to do if they need a full year and they're way behind schedule. On top of that, the expectations just continue to build, right? Even if you crush it out of the park, it's been so long that that's a problem. All right, let's check out the gold contract. Gold's looking a little weak right now. I tell you, this move off the top, the volume we had, April 22nd, April 23rd, we're now coming into the area of April 3rd when we were trading as high as almost 3,200. And yesterday's move, folks, okay, you trade from 33, 32, you trade down basically $120 to the lows, and you got to watch the dollar. I've been talking about that even with some dollar weakness, it was tough to imagine gold catching a bid, but I think what you're going to see play out here is that, like you're seeing almost today, okay, the dollar right now is right where we were on April 25th, a week ago, okay? And yeah, gold is close, but you can see gold is actually lower. All right, so you're pulling back on dollar strength, but you're not getting the same degree of an acceleration on dollar weakness. It's exactly what played out on an inverse basis when the dollar strengthened. I know I've been talking about it, but pay attention to it. I think this is what's happening. We got dollar weakness, though. And that would be interesting, man, today. Let's see what yields is doing real quick before we jump around. Yeah, look at this. So even with higher yield right now, the dollar's showing weakness. Maybe yesterday was the head fake. We just traded from 100 to 99.65. We're almost at session lows on dollar weakness as we have yields spiking. Some of the relationships not intact in this market right now. We should not be having dollar weakness as we have yields spiking. But that is what's going on right now. So to back it up, when we go back to this move, September 30th to the middle of January for the dollar, 100 to 110. Dollar strengthened by 10%. Okay? And there's your action on gold. That's what you had happen. During dollar strength, you consolidated, and then during all the weakness in the dollar, you got the huge acceleration in the gold contract. Be careful about the same thing potentially happening here on the inverse relationship, right? That if we get dollar weakness down to 90, you could see gold consolidate after trading from 2,600 to 3,500. And the potential there, though, is if you do get dollar strengthening, you could see the weakness come back, right? On dollar strengthening, you could see more weakness than you would see when gold appreciates as you get dollar weakness. Back and forth we go. Nonetheless, gold up by $42. S&P's up by 64. We're coming back for the opening bell, folks. Don't go away.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open with the S&P is up by more than 1%, up 61 points right now. You see the acceleration. We're going for the 9th consecutive day of gains in the S&P. Hasn't happened since 2004 when I was 24 years old. Watch out. That's some time. S&P is up by 61. NASDAQ 100, we're up by 1.1%. We do give it up a little bit from coming into the opening bell. Yeah, 60 points. We're trading basically near session highs, pre-market highs, with the Dow up by 435 right now. How about Bitcoin? right? 97,000. Back from the highs of 110, but we're pushing highs. We're in this consolidation area, and that's basically what you're coming into. For the better part of basically the election to when the market deteriorated, Bitcoin pushing those highs yet again. Lofty expectations with Bitcoin pushing six figures at 97,670. And boy, yields in the dollar are going to be an interesting one today. Because there's your 10-year. We're talking about a 10-year right now at 4.29. And at the same time, we got the dollar pushing session lows. We just hit 99.60 right now on the dollar. Check out that gold contract. Up by $39 at 32.61. All right, let's digest how we're doing on the open for, watch out. Okay, Apple. They're selling Apple on the open. There you go. Down by 5%. Whew. A little bit of a sell in Amazon, but man, for Amazon shareholders, up by 0.2%. Gotta love that after the action last night. Especially when they're talking about, to reiterate, folks. Okay? It was a pretty remarkable projection. The market was thinking they were going to make $18 billion, and how about you just shave $4 billion off that number? $4 billion off that number, okay, $4.8 billion to be exact off that number, is like a 25% hit to their earnings estimate. Now, maybe there's optimism that they're giving themselves the range and they hope they're going to come in on the upside of that range. You underpromise and over-deliver, right? That is the goal of public earnings. Underpromise, over-deliver. Set the expectations low so you can always beat it. Nonetheless, that's a radical range when you're looking for $18 billion in profit and Amazon says they might make $13 billion. You're shaving $5 billion off that number, yeah, which is almost like a 28% number of where you could be. Sales in line. It's all going to be earnings. Now, Amazon has a history of sacrificing earnings for growth. The revenue number is strong there. But nonetheless, that's a big number, and Amazon shakes it off, man. Flat on the session, but Apple, off by 5%. Now, check out this one. So the new rules having to do with Apple allowing competition, okay? They clear the new Spotify update under the new rules allowing purchases within apps. And this new app for Spotify, and they're always updating your apps, okay, is going to allow users to access pricing information and links to make purchases and select from more payment options within the music streaming app. Now, what's always remarkable here is the percentage that Apple takes, right? I think it was 30%. Apple decided to charge a 27% fee on some purchases linked to the App Store. And why would you ever pay for anything through Apple if, in theory, the company can give you a link and they could offer you greater? It's too much of a middleman once that opportunity is there. As in, you've always been able to sign up for something outside of it, but within the app itself was always, they wanted that monopoly, and that's changing right now. And that is going to have a material impact, man. You think about the amount of money. I think about it myself every time I sign up. For instance, you sign up for Paramount Plus, the streaming service. You sign up for that through the App Store. Apple gets 30% of it. You sign up for it on Paramount.com. Apple gets none of it. How does that work? Why would you do that? Why can't I get a better deal by cutting Apple out, right? Can't Paramount? It makes sense, okay? And the reason was that Apple just didn't allow it, and they had a big enough ecosystem that they could do that. That's not the case anymore, and that's not, nonetheless, longer-term implications, yeah, huge, relinquishing that monopoly. All right. And what else do we got going on, folks? We got the Kentucky Derby going on this weekend. How about it? Gambling interest is strong. Undeniable, always, right? Vices, always. Churchill Downs CEO, he's talking his own book, but nonetheless, interest in the Kentucky Derby is strong despite global uncertainty. And boy, the amount of money bet, I was reading something earlier, I don't think it was in this one, on the Kentucky Derby. While they've paused a $900 million capital improvement project, But nonetheless, demand is strong. No, it's not on this one. But yeah, that Kentucky Derby taking place tomorrow. Right? Yeah, tomorrow. And, I was just watching. I think it was on Netflix. Let me see. There's a great documentary. I say documentary. Show. Is that where I was watching? I better find it. Maybe it was on Max. Let's see. Yeah, it wasn't on Netflix. All right, I'll figure it out. But a great show, if anyone's watching it, talking about the horse racing industry. Kentucky Derby, Belmont Stakes, all that good stuff. And they got some characters in there as well. All right, watch out for Apple shares, man. On the day that you get a China reprieve, investors not buying the story. And Amazon drops too. Amazon down by 1.1. We got some negative action going on in this market right now. Boy, you ever roll over today, you better watch out. But we got a lot of optimism priced in these markets, folks, at a time when we definitely still have uncertainty. You don't have to call from the end of the world. You don't have to call from massive uncertainty. But just for some context here, the week of November 4th, the market was trading at 57.24. Within 1% of where we were this morning. Okay? That's fair. With all the economic turmoil going on, whether you agree with it or not, we're right where we were coming into election week. That's it. There's been no Max Payne situation. There has. We've got it all back. Okay? Interesting area you come into. Right into that area, and that also correlates to where we're coming in. Basically on the chop we got on the first acceleration lower. We're at 56.79. As I mentioned, we just got to a price point of about 5,700, 56.99. Yeah, look at that. We just got to 56.99. Yeah, 56.99, and the lows were 57.24. So within 25 S&P points of the week of the election. Right back. Got it all back. And I was talking about on my article yesterday, on my program yesterday, I think it was a journal article talking about the remarkable comeback that this market has had since Liberation Day. And if you cherry pick Liberation Day right there, yeah, we've gotten it all back. But it's a much greater comparison if you cherry pick the high, and probably the fairest comparison is the day of the election, right? The day the market started pricing in the expectations for the plans that the president was going to have, and we knew who it was. It's a binary choice, and we're right back to where we were. Pretty remarkable. All right, folks, S&P's up by 59. Apple, Amazon, trading in the red. We'll take a look at some other equities when we get back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Markets holding on to the gains. S&P's up by 64 right now, 56.87. NASDAQ 100, we're up by 1.2%. And that's even with Apple, biggest company in the world, getting clobbered today. Down by 5%. You accelerate lower. We break those lows this morning. We just hit 202. Amazon, they give back the gains, but all things considered on their numbers, we've been talking about the earnings revision for the forecast, only off by about 0.6% for Amazon. We check out some of the other tech companies. There you go, right? Microsoft, up by another 2%. How about Meta, up by 2% right now? You jump over to Google shares, up by 1.2%. We check in on Tesla shares, up by 1.4%. NVIDIA right now, up by 2.8%, up to 115. The volatility on this equity, remarkable, man. And that program I was thinking about, it is on Netflix, and it's called Race for the Crown. There it is. You know, it's just an interesting show. You're in it. Kentucky Derby's tomorrow. I found myself watching that. They're probably getting a push for it with Derby season coming down the line. But there's a cast of characters. You meet the jockeys in there as well. Interesting stuff, nonetheless. And, you know, I always like real-life documentary stuff like that, just learning people, whether it's the jockey business, the owners, the horses. Boy, they get some personalities, but that's the case in any business, right? And I talked about it before. For me, you know, F1 Drive to Survive, huge hit. I know many watch. If you haven't watched that one got me hooked about a year ago, man. F1 Drive to Survive. And they got that great St. Pete Grand Prix, folks, which just happened. If you've never make it to that one, make it on down. It's not the F1 circuit, but it's the sister circuit. Not the sister, but nonetheless, same exact thing, man. These cars, it's a different planet, the speed that those cars have. Talk about life or death. All right, we keep our eye on yields and the dollar. A little bit of a bounce from the lows. Not for the dollar yet. Check it out. We got a 99.4 handle, man. Look at this dollar. Okay. On a 5-minute basis, I mean, look at this thing. Just on the 935 bar, you're down almost a full quarter, right? 25 basis points. We got dollar weakness right now. You know, yesterday, maybe that was the head fake. Important technical area, not a coincidence. We're turning around at that 100 point. You know, the tough part is, right? I'm always watching the relationships. You got the gold report. I got market insights. Look at the bounce that gold's getting today. I'm going to back this up on a 15-minute, okay? So the dollar is right back to where we were in the middle of the day Wednesday, okay? Gold contract, middle of the day Wednesday, you can make a case was up at 33.16, okay? Even the lows of that day were at 32.85. Excuse me. You have dollar weakness, but you haven't gotten back the same acceleration in gold. And this is what I was talking about, okay? Look at that dollar weakness and look at where gold is, right? Gold is not catching the same accelerations on dollar weakness as it is getting punished on dollar strength. Doesn't mean gold's in big trouble. It just means gold has some digestion and consolidating to do after a one-way trip from really 2,200. Okay? It's really a one-way trip. The only pause, right? Check this out. And listen, I love gold. We're still going to be buying gold equities in the gold report. Okay? There's nothing wrong. It's probably healthy longer term. You get a consolidation here. But shorter term, I'm a little bearish on gold right now. I am. The only consolidation you had in gold is this box here when you had the dollar strengthen from 100 to 110. Gold remained remarkably strong during that consolidation. You were just offsetting the currency strength it was priced in. And then when you got the pullback, boom, right? Dollar pulls back from 110 to 100, and gold goes from 2,600 to 3,500. So we have some consolidating to do from 2,000 to 3,500. You're up 75% in just over a year. That was February 2024. And by April, so you're talking about 14 months, gold was up 75%. You're seeing it happen today. Okay, we're not getting the same, and I know I'm harping on it, but I know we got a lot of gold bulls out there, and you're not getting the same acceleration, okay, which is important. Look at this dollar. You're not getting the same acceleration to the upside in gold as you are when you're getting punished when the dollar strengthens. Yesterday, I think gold was down $100 at one point. Today, on the move that's now everything given back, we're only up 30. So buyer beware right now, as we got shorter term some digestion to do in that gold contract, in my opinion. Because keep in mind, the only consolidation was when the dollar strengthened from 100 to 110. And that was really no weakness at all. Gold powered higher all the way for 14 months straight. We jump over to silver. I mean, different story on silver, right? Look at this, silver. With the dollar chart I just showed you, silver's up 2 pennies. Right? Be careful of silver out there. We jump to copper. Yeah, if you're watching this copper market, all right, I've been talking about, that's the upper boundary, somewhere near the $4.80 to $5 range. Can you get above there? Of course you can. But we're near the top end of that range. You see the copper rip lower a couple days ago. Longer term than that, we go 3-year weekly. You see that consolidation area, and yeah, you know, you really want to stretch things out. 520 is the number, but you can see this area as well. Whether it was back in February, whether it was back in basically the beginning of October, copper reaching about 480, and we're just under that area right now. All right, we talked yields. We talked Apple with their new apps. Jobs, Amazon. Yeah, keeping with Apple. You better believe they're trying to change things up, and they probably should have changed them up a little bit quicker. The writing was on the wall like 8 years ago, right, with China. They're going to source more than 19 billion chips from the U.S. this year. How about that? It's surprised they didn't get out of China a little bit quicker. You're still dealing with problems with India nonetheless, but China is their own exception. Apple already makes 1 in 5 of its iPhones in South Asian country, and that's talking about, forgive me, India. Yeah, exactly. All right, Apple finding a little bit of a floor. We're down by 4.7%. Amazon shares, yeah, look at that. Give back $6 on the open, down by 1.4%. Microsoft reaping some of the gains, up by 2.25%. Google up by 1.3%. Meta up by 1.6. Microsoft, the big winner this week in tech earnings. Check it out. Stay tuned, folks. One more segment. We're coming back on Jobs Friday. Markets in positive territory, going for the 9th straight day of gains in the S&P. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Market's slightly off the highs right now, but not Microsoft, man. Not Microsoft at all. You know, when they came out Wednesday, Microsoft, Meta, strong numbers. Meta's forecast nowhere near as strong as Microsoft's in terms of the forecast for the future, the beat that they had, and you're now pushing the highs of yesterday morning with Microsoft up another 2.7%. And that's even as you take a look at the NASDAQ 100, we've basically trailed off from the highs. We've given up. We were 100 points off those highs. Amazon shares down by 1.3%. Apple weighing on everything, down almost 5% right now. NVIDIA up more than 2%, although you were almost $2 higher at $115.40 for NVIDIA. And we jump to Google, up about 1% right now. All right, we jump to some oil stocks. Exxon down by 0.7. You were as high as 109. CVX, Chevron out with their numbers as well, basically flat. And you jump over to the headline. Profits fell ahead of tariff-driven oil slump. I know, oil, right? $58. Whew. So you have Exxon earnings $7.7 billion. That's down 6.2% from a year earlier, and they just beat at $1.76 versus $1.75. Chevron, their quarterly profit down 36%. Yeah, we check out that crude market. Whew. Tough to find a bid right now in this crude market, man. I mean, check out that daily, right? You know, if you're a buyer, sure, you got your back against the wall. Don't give yourself a lot of room, okay? But we all know how this crude market works if you're around when we don't all know. But boy, volatility, never think it can go lower. It can't go lower than it can. We're trading at 58.42. Markets in positive territory. Folks, thanks so much for kicking off your Friday right here with me on the Morning Market Kickoff at TFNN. I appreciate you starting your morning here. We got markets in positive territory on Jobs Friday. S&P's up by 53. Stay tuned, folks. Basil Chapman, he's coming up next for the Tiger Technicians Hour. Have a great day, everybody. We'll see you on Monday. Have a great one, folks.